threshold on that, or do I register?
That's what I was thinking, actually, because I remember when I was doing my own stuff, actually, you know, that if you weren't at a certain amount, you didn't have to register for VAT. Is that
Yeah,
true?
absolutely. So it's about,
So there is a
it's nearly 40 grand. And the weird thing, Dawn, is like, I know a lot of particularly creative people, because we've had them in doing guest talks over the years in arts management, will actually scupper their own scales, sales even, as soon as they realize they're getting close to that threshold, they will actually turn work away because they're terrified of crossing over. Because not only does it mean you've got another tax, and nobody wants to hear that. You've also got a bit more paperwork to do, and nobody wants that either. So people do the weirdest things based on VAT. So that'll be my answer for now, but we will come to it again. But if I miss something, don't come back to me on that.
No, thanks. That was really comprehensive. I mean, I know you're coming back to it, but you know, I never really got that whole thing about when you got to a certain limit and what that actually meant for a business when they did get to it. So that's interesting.
Yeah, yeah.
I suppose the other question then, so what's the difference between a sole trader and a limited company? And I think this is something that, you know, that comes up all the time for people, you know, when they see LTD after a business, like what does that mean?
Yeah, yeah. Well, a sole trader or a sole proprietor, as they say in different parts of the world, is the simplest kind of business you can be. It almost, in some ways, the setting up is nominal. So basically, if you're a sole trader, you and your business, or you and your livelihood, are regarded as the same thing. Like your tax, as you know, the human and the business are basically the same thing. When you're a limited company, when I started off many years ago, I worked for myself, I decided to set up a limited company because that is a separate entity completely. It literally is a separate, what they call a legal person. So there was just me in my business. I was set up as a limited company. So I employed me, or is it me employed I? I'm not sure what the grammar is there. And that's a bit of a head wreck for a start, but also I just felt I was more legit if I was a limited company. Now, what that means is if you are a limited company, you have an extra bunch of paperwork to do in the setting up of it, and also in tax returns, because your company will get taxed, and to some degree so will you. But I know a lot of people say, well, you know, I hear the company tax is only 12.5%, which it is. That is absolutely true. So why would you become a sole trader paying 20 or 40% when you could be a limited company and pay 12.5? Well, the answer is, like I was saying, your limited company is a separate entity. Yes, it will pay the 12.5. And whatever you pay yourself out of the company will be paying the 20 or the 40%. So that's the difference. But like I said, I will be coming back to that. But the one thing I will say, people who know a bit about limited companies know that it means that you've limited liability. And there's this notion that if it all goes belly up, you can kind of walk away. That's really not as nice as that.
That's,
you know,
funny, because I was just about to say to you, but is it about culpability? Is that's why you would do it? You know, because you wouldn't be as culpable if it's limited, and you as just the person, maybe you are then culpable. But what you're saying is it's a little bit more complicated than that.
It's a bit more complicated. Like any half-decent barrister could remove what they call the veil of incorporation, could actually say you've been trading recklessly, so basically you and the business are one and the same, and we're coming for you. So I mean, then that's a very general answer. I mean, there are loads of exceptions to that, but certainly I wouldn't set up a limited company for that sense of protection. There are lots of other reasons why you might do it. Like I did it for the shallowest of reasons many years ago. It just looked a bit more professional. And so yeah.
So you did it the way people kind of pick their kind of websites and their you know, and what they're going to have on that. You kind of did it for that reason. It's that kind of like have LTD on your letterheads kind of thing.
Yeah, it just felt posh.
Okay.
That was it, yeah.
Okay, so I've one more question then, Peter, and then I suppose you can go through the rest of your presentation. I suppose the other thing as a top 3 question is kind of you know, do I need to do bookkeeping then? Or do I need to know how to do bookkeeping?
Yeah, I would say you don't need to know, but you do need to do a bookkeeping, because the precursor of anything to do with taxation is accounting, and accounting just means keeping a record of stuff. Dear diary, like today I bought X, Y, and Z. Tomorrow somebody's going to pay me 100 quid for work that I did last week, and you just jot it down. And nowadays, with our Fitbits and other things that we measure in life, we're quite used to it. There are loads of really cool apps out there that just record your expenses and your sales, no more, no less. You don't need to get into balance sheets or anything like that. So literally money in, money out. So we're going to see a little spreadsheet later on that is literally money in and money out. The most important thing to do is to formulate the habit of doing that. And to do that every day. The worst thing in the world is when you let that slide, and then you're trying to remember what you spent for something. And then
can I just reiterate that for you, because I was the slider. Okay, so I had my own business for 10 years. And I know you don't need to take on an accountant. It is something that you can do with yourself. Revenue, make that quite easy. But I did take on an accountant, but I still had the headache of getting everything together. And it wasn't until we were talking about this presentation that you said, oh no, people hand in shoe boxes. They hand in shoe boxes of receipts to, and then somebody else sorts it out in the accountants, but you pay a huge tariff for that. Whereas I was getting accountancy at quite a low fee, but per year it was like 150 to 200 euros per year, which is worth it for me just to hand it away. But before I handed it away, I had to put it all in an Excel sheet. And that was me going through drawers. And I did it to myself every single year, Peter. So if there's one piece of advice that I could give to anybody, because it was the most painful part of my year, is, have a folder there, put your receipts in the folder, have a folder that has dividers in it, go by month, January, if you can do something by week, do it, because it just makes it so easy to pull together in the end. And it stops you having to kind of go through all of these receipts. And I don't know if you're getting into the kind of working from home and your bills piece and the percentages of that or anything, but they're good receipts to have as well. And just having a system where you can just say, well, that receipt goes in there. I had receipts in the back of my phone, in old wallets, in drawers, and it's just absolutely painful. So I hear you on the bookkeeping piece.
Absolutely, Don. I would say if you're going to go self-employed, the two things that you got to buy are a stapler, staple stuff together, and one of those receipt spikes. Now they're very dangerous, but they're really, really good. You get ones with little rubber tops that don't hurt you. I stabbed myself many times back in the day. And that's really it. I mean, that's accounting done. Box ticked. The other thing I would say, and I'm glad you prompted me there, is a lot of people, when they are self-employed, they will use cash to pay for stuff. Now this is probably not the case nowadays, and definitely after the last 3 months, definitely not the case. I would use plastic. Use digital money, because at least then your bank account is a kind of set of accounts. It's a bit dangerous to regard it as that sometimes, but it's better than nothing. So cash is a big problem. I used to work in a shared office with actually 4 or 5 very creative people. They were in communication television. Actually, TG Carr, they were a producer of TG Carr. And they used to keep different bits of cash in different envelopes. And apart from the security risk, it was impossible to keep track of what they spent on things. And they spent a lot of their time when they should have been out there on shoots and doing cool stuff, just worrying about, where did my money go? What am I spending it on? So develop a habit on day one and stick to it. And that's it. Get the spike, get the stapler, and off you go. You're on your way. So absolutely, that's what I'd recommend.
Okay, thanks for that. I mean, that's the end of my top 3 questions piece.
Okay, good.
So I'll hand it over to you again.
Good. Okay, so thanks, Dawn. So what I'll do is I'll go through the just the presentation, and then I think we're going to break a couple of times, maybe for some chat questions, or Dawn, just jump in anytime, because otherwise I'll just rabbit on. So.
Okay,
a couple of things, going back to what you were saying earlier on. A lot of people say, for example, when they set up in business or they become self-employed, my company's doing this, so my company's doing that. And I would say, unless you're actually set up as a limited company, you're not a company. So, for example, there are 3 main kinds of legal forms when you're self-employed. Now, remember, you can have a regular job, but this could be your weekend job. You're either going to be a sole trader, which is the simplest form. We mentioned that earlier on. You could be a limited company. So in other words, you own another version of yourself almost, or you could be a partnership, which is actually rare enough nowadays. But that's basically a group of sole traders who have a little written agreement about how they're going to operate. And then on the right-hand side of the slide, you're right, my right too, yeah. You've got contractor, consultant, freelancer, independent. Now they're all what I call street words. They don't really mean anything in themselves. So they're just, I'm setting up as a contractor, I'm setting up as a freelancer. So you can be a consultant sole trader, You can be a consultant a partnership. You can be an independent limited company. You can be a contractor limited company, a contractor sole trader. So the words on the right are just street words. They don't describe your legal form and in a sense, how you're going to be taxed. So people very often mix up the column on the left with the column on the right. So the one on the left is kind of, formal, and the one on the right are kind of meaningless words. So it does make a difference when we're talking about taxation. So it's important not to mix those up. And everybody does. Okay, so maybe the next slide is a bit more detail on that. So what does it mean when you are a sole trader limited company partnership? When you're a sole trader, you and the business are one and the same. You're taxed as one. So in a weird way, as I say to my arts management students, if you're a sole trader, the profit of your business, that surplus you make, that extra, whatever you make at the end of the year, at the end of the month, the end of the week, that extra surplus, call it profit, call it whatever you want to call it, that's your salary. If you're not making that extra whatever, then you have nothing to pay your bills with. So as a sole trader, you couldn't be a not-for-profit in a way. That's maybe a childish way to look at it, but that's kind of it. So as a sole trader, your profit is your salary. And this is a very old-fashioned term, and I wish they'd stop using it. Actually, people say, "I'm taking drawings out of my business." The older ones among us might remember that term. And that simply means that the profit of your business is 100 quid. When you're taking that 100 quid out of your business, that's called taking drawings out of the business. Now, the important thing to remember about the profit of your business, that is the thing that you are taxed on. So if you make 100 euros profit, you're going to be taxed on 100 quid. If you make no profit, that's maybe not so good, but the good news is you don't have a tax bill because you haven't actually made a profit. The trick when you're a sole trader or self-employed is you don't really know until the end of the year what your surplus is going to be, what your profit is going to be, but you got to pay your rent, you got to go to Tesco, you got to do stuff. So you're paying yourself something out of your accounts throughout the year, hopefully not blindly, but most people do it blindly. And at the end of the year, you discover, actually, you know what? I actually didn't make a profit at all. I really shouldn't have taken anything out of the business. And I did. So in effect, my business has given me a loan. Now, what I've said there, that's one hell of a foxhole that we discuss at another time, but that happens a lot. Or another thing that happens is you make a good profit, you make 100 quid, happy days. And the thing is, that's the figure that you're going to get taxed on. And let's say, for example, not one of your customers has actually paid you. Very common, unfortunately, or they paid you way, way too late. So on paper, you've made a profit of 100 quid, but you don't have a cent in your bank account. In fact, you're down about 500 quid in your bank account. You're going to still pay tax on that fictitious 100 quid. So that's another reason why you've got to do some kind of bookkeeping. And like I say, just record money in, money out. You're doing your Fitbit every day, do the money in, money out every day. So you have a pretty good idea as you go along what kind of surplus you're making or not. So that's an important thing. Because at the end of the year, people get their accounts done and they go, and you're told, you've actually made a profit. And people are like, well, actually, my bank account is down 300 quid. How could I have made a profit? And it's because nobody's actually paid you, and you have a tax bill as well. So that's an important thing to remember.
And I suppose just to jump in there, I mean, that's I was every year I expected, the tax bill was there, and that was your kind of yearly thing, was, that tax bill needed to be paid off. So you knew that was coming and saving up towards it. And I was never organized enough, which is now why I came out of sole trading. I was never organized enough, when I think about it, to know even nearly exactly what that was going to be. Mm. So I'd always have to pay more than I thought. And just to kind of bear that in mind, that I'd be making money along the way, but actually you are gonna have a bill at the end of that year, and you won't know what that bill exactly is until your accountant does your final kind of piece.
Absolutely. And if you're doing any kind of bookkeeping at all, you'll have some idea what it might be. Like, I know a lot of people, when they're starting a business, they'll open a bank account for the business. I mean, never use your personal bank account for the business version of you. Many people will even open a second business bank account, and every time a client gives them 100 quid, they'll pop 80 quid into the main business bank account, and they'll pop 20 quid into the other bank account, and that's basically they're kind of paying off their tax bill in their head as they go along. You can also.
Now I'm wishing I'd talked to you years ago. I just need you in my back pocket, Peter.
Well, Dawn, when I was self-employed, I didn't do that, and I got the
I
same
didn't.
fights that you got at the end. Believe me, I never practiced what I preached. Well, I did a bit, but not as much as I should. And then the other thing is people sometimes do similar when they're putting, you know, VAT to one side throughout the year as well. So it's a good idea to put money aside throughout the year, but sometimes you actually can't. You need money to pay the next bill, so it's easier said than done. Now, on the limited
Yeah, and
company,
that's true. And can I just say, like, in my own defense, actually, I was working with lots of different gigs. So I had lots of different people that were paying me at different times. And sometimes, when that money comes in, you know that the other money's, but it's not here yet. And so you're kind of begging from Peter to pay Paul a lot of the
yeah,
time, actually. So,
yeah.
so it's more complex than just not putting, the money away, but actually to get into that, to get
Mm.
that in your head, that instead of using all of that money that you're borrowing from Peter to pay Paul, to make sure that a percentage of it at least isn't used for that means.
Absolutely, and I like the analogy, sort of, paying Peter to pay Paul. A very common thing that happens is people will, when they set up, they will maybe have 3 credit cards, and they'll be transferring balances from one to the next just to stay afloat. Because if you look at accounting textbooks and they talk about, sources of funding for a business, it's things, it's always things like shareholders and getting maybe some grant if you're lucky, or they're always very kind of formal ways of getting money. Most people don't do that. It's piggy bank stuff. It's money under the mattress. It's credit cards, and if you lose sight of those, very quickly it gets very messy, and then it doesn't end well. And so likewise, if you're a limited company, basically there's two versions of you. There's 2 in 1, and you're taxed as the person that is employed by the limited company. So your limited company, let's say it makes a profit of €100, it's going to pay 12.5% on that. That's €12.50, and then you pay yourself €100 throughout the year. That's an expense to the limited company, so that reduces its tax bill, but also its salary to you as a person. So when you're a limited company, you get paid a salary on a regular basis, if you can afford it, if the business can afford it, just like somebody that you actually employ. You're just an employee of your limited company, which is owned by you, so you're an employee of you. A bit of a head wreck. It does, and one of the reasons I did it all those years ago, it just kind of regularized things. It meant that I had to do a bit of accounting on a regular basis, and again, like I said before, it just felt more formal. There's an old saying, like, when do I become a limited company or not? And there's a saying that once you start earning more than you need, it probably makes sense to become a limited company. The limited company structure is not as complicated as people actually think. Setting up a limited company, you can do it online. I think we have a link later on that shows you how you do that. So literally anybody today, and I would highly not recommend this, could be a limited company by tea time if they want. The problem with a limited company is it's very difficult to get out of. When you're winding down a limited company, you've got to jump through so many hoops, put ads in newspapers, etc., that it's more formal. So it is a kind of a grown-up thing. Another misconception about a limited company is, well, maybe when I'm big and bold, I'll do it. Once I start making, €10,000 or whatever, then I'll become limited, because that's what the big boys and girls do. Not true. You can be a limited company employing one person, making literally €100 a year, and you can be a sole trader making €3 million, employing 1,000 people. So it's not to do with the size or the complexity of the organization. Like I was saying before, or like I might have said before, if you're a limited company, you get limited liability. Also, as a limited company, remember I said before, you've got to do returns to the tax office, and you've also got to do a return to the company's office, which is down in Carla now, I think, or used to be in Parnell Square. You do it online. Everything nowadays, by the way, is online. So you send that in. Any limited company in Ireland, and I'm sure we all know people who own limited companies, are limited companies, their accounts are available for the general public to see for the princely sum of €2.50. So like I said, a lot of sole traders who have huge businesses don't go the limited company route because they don't want their accounts to be available to the general public. Accounts being available for me as a lecturer is very good, because my 4th years do projects on arts organizations, and all their accounts are available for them to download. So that's another reason why you might not want to be a limited company. It's a bit of a dodgy reason, but that's between you and your conscience. So that's the difference. So it's 2 entities, and a partnership is a group of sole traders, and you'll be taxed in whatever ways you've agreed as a group. So they're mainly the two main ones. Partnership, not so much. Okay, next slide, please, Rebecca. Yeah. Oh yeah, here's my scary side. Yeah, so Dublin Castle there, the Department of Revenue is there, Dublin Castle there. It's actually on Georgia Street there. And there's a notion like, what am I paying tax on? You know, if I just have a bit of a job on the side, I'm working, you know, Monday to Friday in an ad agency, earning whatever, you know, 30 grand a year, 40 grand, whatever it is, and I'm doing a bit of freelance work on the side. Am I paying a different tax rate on both, or how does that work? The way you're taxed all over the world is that you're taxed on your aggregate. So for example, if you're earning 30,000 in the regular job and an extra, say 10,000 in on your weekend nixer, whatever, your self-employment, and also you've got, you're a part owner of an apartment in Ibiza or something, and you're getting rental income from that of 5,000, all of that is added together. So what's that? That was 30, 10, and 5. That's at 45. So your earnings are 45,000 euros. Everything that you earn is added together from all the different sources. So certainly at that point, a chunk of your earnings will be in the higher tax bracket. Oddly enough, not from your regular job. So think in terms of aggregate. The other thing I would say is think in terms of worldwide. So if you're a resident in Ireland and domiciled in Ireland, and you need a whole other lecture to talk about what residence actually means in domicile, but you can certainly Google it. Then your worldwide earnings are subject to Irish tax. So if you do have that apartment in Ibiza, or you are doing a nixer for some client in Melbourne, Australia, all of those incomes are subject to Irish tax. Now, you may also, going back to Ibiza for a second, you may also be paying some Spanish tax, but we generally have double tax agreements between different countries. But like I say, that's quite complicated. So just to get used to the idea that your earnings in aggregate are taxed and your earnings worldwide, or planet Earth, as I call it. So people often think, if I have earnings that are kind of off the grid, is that kind of okay? And the answer is no, they'll find you. So that's my scary tip there. Okay.
But can I just say that, like, what I found from revenue is that talking to them is really, really good. So there were many times where I got a tax bill that I really wasn't expecting. And I was able to then just over 3 or 4 months at the start of the following year, pay it off bit by bit, you know, and it just took kind of communicating with revenue in order to do that. I think what really annoys revenue is if you don't communicate.
That's absolutely true. Like I mean, when I do the scary stuff, it's more for a kind of effect. But about 20 odd years ago, the tax authorities completely changed how they operated. You know, they have a kind of a customer charter, all that kind of thing. When you ring them up about anything, they will try and help you. Some people, when they actually register their business, sometimes actually get a visit from the a tax official. And they're there to actually teach you. Like it's fantastic. It's a free mentoring service. Like embrace it. They're not there to kind of audit you. Not yet anyway. And even on the various tax returns, there's a chunk. There's a little thing, whether online or in paper, and it's the first page or second page from memory, and it's called expression of doubt. And what it says is, you know, I've done my own tax return. You know, I'm a very small entity. I made €1,000 this year. But I'm not quite sure I filled in page 4 correctly, or it could be something really silly. If you send in that form early enough, you'll get a call saying, actually, you know what, you did it perfectly, lovely, well done, we'll see you again next year. The downside of that is, just to go dark for a second, is that when tax returns go in, and 95% now are online, they are interrogated initially by sort of AI software that checks them for, do those figures seem reasonable? So, you know, we have somebody working, with somebody who's an advertising executive in Dublin 6, or a theatre set designer in Dublin 8. And we've loads of those on our database, and they all seem to make about 20 grand a year. And then this person is making 2 grand a year. Oh, that's interesting. So the system might flag you as interesting. Or it could be that a couple of years in a row, your tax returns are wrong, or they're messy or whatever, and you might just be flagged as interesting. So that's not a bad thing as such. And their first thing to do is to help you. They've much bigger fish to fry than the likes of you and I. So
and you were saying something about kind of not maybe registering for a couple of years and then suddenly registering, and then they're going, oh, you're here this year. Where were you for the past 2 years? That kind of.
That is true.
Even if you're making no money, just register.
Absolutely, because what happens is, you know, you've left college, you work for a couple of years, it takes a while to kind of take off, you've made no money, so you're thinking, I'm making no money, why would I do a tax return? Like in the old days, why waste the price of a stamp? And what happens then is when you finally make yourself known to them, they go, oh, welcome, but you know, we didn't see you for the last 3 years, because remember, we all have PPS numbers and we are trackable. And I don't know how much that they can really check where you've been and what you've done. But they would find it interesting, quirky, that you've been missing for 3 years, and that may be interesting to them. So it's good not to give them reasons to miss you. Also, if, as most small businesses, the first year tends to be a bit tough. You might even have made a loss. The good news is in year 2, you make a profit of 100 quid in year 2. You've made a loss of 100 quid in year 1. You can offset one against the other. So year 2, you don't have a tax bill. So it makes sense to make yourself known to them early on. Now there is a certain leeway. Like if you start a business and after about 3 weeks you think this is not for me, I'm going to fold it, and you make no money really, and it basically didn't exist. If you didn't register that, and I'll deny ever saying this, but if you didn't, I don't think that's going to be a problem. There is a reasonable kind of test here. But what I want to say is we have a thing called a sort of self-assessment now, and that's on, you can Google that. There's a link to that, I think, in our resources. But what that really is think of that as a philosophy. The Irish tax system about 30 odd years ago said, okay, if you send in a tax return, you or your accountant, and you say, I've made a profit of 100 quid, they say, sure enough, fair enough, we believe that, that's fantastic, see you next year. If in their random audits they discovered that you were a bit naughty and that's not what happened, then the penalties are quite severe. So it's based on this trust. We'll treat you like an adult, we're very nice to you, but if you let us down, we have teeth. And I think the worst part of that really is that you see that every so often, and now that I've said it, you'll see it more often. People do get named and shamed in the newspapers. And if you ever look at that, I always show it to my students, the tax bill might not be that huge, it might be 20,000 euros, but the penalties could be another 20,000 euros or more. So that's the dark side. So the thing is just to be compliant, you know, send them off stuff every so often, try and meet the deadlines, even if your returns are blank, or if you're doing it online, 000, and then you sign at the end. They're looking for compliance. For most people, the numbers are not going to scare them, or the lack of numbers. So compliance is important. Okay, so registering as a sole trader. Yeah, so I think we have a link here, Rebecca, do it yet?
This is the one that's to the actual main page of revenue.
Oh yeah, good.
Fast.
Okay, so yeah, I wanted this to come up. Thanks, Rebecca, because the revenues webpage, they've come a long way now. Those of you that are designers will say they have a long way to go, and I'd agree, but it is actually quite user-friendly. And certainly if you are self-employed, I would add this to your bookmarked pages or your home pages, and just dip in every so often. There's a lot of stuff in there, but of course you can dip in just your little toe now and again. Nobody is saying that anybody needs to know everything that's going on here. If you have an appreciation of about 1% of it, that's more than enough. And you can see the different sections there. Something for every life event there. There's inheritance, starting a business, that's a good place to look. So just make it your place to look into. And generally each section begins with an overview, and that's it. So if you become a sole trader, you can register the business name. I'll come back to that in a second. And then you register online. Now this link, just hit that link there, Rebecca.
Yeah, this is the scary form.
Yeah, the one that, yeah, horrendous. Yeah, isn't it? Yeah, I get my students to fill it in. It takes up a whole class to do it. This is called the TR1, Tax Registration 1. This is for sole traders. I guess 1 means sole, uno. The TR2, which we won't look at, is almost identical. If you blink, you wouldn't be able to tell the difference. And that's for two's companies. That's basically it. I wanted to show this because if you look at it, it's not pleasant. There's no way of saying that. But the online version is a bit nicer because most people, when they're filling in this, I think this is 7 pages. It gets longer every year. This was about 4 pages when I started teaching. Most people are only needing to fill in about a quarter of this, maybe a third. So for example, there's a whole section on VAT. If that is not your thing, you don't want to register, you can't register or whatever, you leave it blank. And 2 years down the line, you might go, okay, I might do the VAT thing. And then you return to this form or a similar form. There's a special VAT form as well. And on the online version, once you don't fill in certain sections, other sections further down are grayed out. So it's even easier. So I don't think, unless, if you're resident, I think you can't fill in this paper version anymore. I think it has to be the online, which is good. It's a godsend. And there are all those helpful numbers at the end. For the most part, it's self-explanatory. Now, what I would recommend, if you are going to get an accountant to fill this in for you, and most people do, I don't really see the need, to be honest, because I'm all for empowering the ordinary person. Just make sure they send you a copy of what they filled in, because you need to be aware of what is filled in and what is not filled in. Some of the questions in there, most of the questions actually, are about building this kind of online profile of you. So if you said, for example, and I won't go to the section, I think my sales for year one are going to be 10,000 euros. Now, how do you know that? Well, you don't, but you're going to guess it. And then further down, you have elected not to register for VAT. Or let me rephrase that. You're saying my sales are 80,000 for year one. And then further down, you've elected not to register for VAT. That's going to seem kind of weird, because at about 37, 38 grand, you kind of have to register. And then you don't further down. So that's going to make you a person of interest. And they're going to say, well, actually, we'd like to help you kind of get through that. There are also questions in there about rent. So for example, if you're renting your office and your landlord is not declaring the rent, there's a little section down there where they're going to ask you who your landlord is. So you're going to kind of squeal on the landlord. That's a conversation you need to have. Also, if you bought the business off somebody else, they started the business in 1972 for 100 quid. They sell it to you for 100,000 euros. That's quite a gain. There may be a tax bill on that. I don't know. So further down, they're going to say, did you buy the business from somebody else? If so, tell us about it, and we'll just doubly make sure they actually paid any capital gains tax. So just aware, the form is not all about you.
Sorry, one of the things I'm really learning from this is you never want to be a person of interest to the revenue.
That is true. That is true.
Back away slowly. Friendly to a point, but back away slowly.
Back away. Just be compliant, be nice. If they're nice to you and you're nice to them, everybody wins. Everybody wins.
So can I just say at this juncture that if anybody does have questions as Peter's going through this, please feel free to put the questions in the chat. So there's a chat button there in your controls. Just put the questions in the chat.
Yeah, and also don't, like, this is being recorded, isn't it? So
yes, I started it a little bit.
Sorry, Rebecca. Sorry. So if anybody misses stuff, because I know if I was watching this, I remember nothing at the end of this. So
I'll put that link later on.
Oh, cool. So there's one thing there, registering a business name. I'm not sure many people do this anymore. And this is just where you've got a really cool name and you want to register it. And oddly enough, you don't register that with the tax authorities, you register that with the company's office. Remember before I was saying, people often say, my company is doing this and my company is doing that. Your company isn't a company unless it's actually set up as a company. And registering your business name, which oddly enough, you actually do with the company's office, is not the same as actually registering a company. So it's just a cosmetic thing. If you've got a really cool name, you want to protect it. And there are lots of ways of doing that. The Irish Patent Office is probably your first port of call. But most people, when they start up, it's actually more the .ie or the .com that they're interested in. So I don't know how many people nowadays actually register the business name, because it is quite cosmetic. But just the weird thing is you do it with the company's office, not with the tax office. Okay, so
question there before we move on. Ryan Jeffries just wanted to know, if I'm being paid by someone in another country, does that make a difference?
No, because they're going to send you the money, and so you are receiving the money into your bank account. So it has no, it makes it like money. Money is money. So that makes no difference. No, money is money. If you're receiving the money from wherever, it's income subject to Irish tax. Now just beware that sometimes that income, for various reasons, might also be, and I'm getting into deep stuff here, taxable in other places. Certainly, if you say you do a gig for, say, the Australian government, generally when you do kind of government work, and this applies to Ireland too, and they owe you $1,000 or £1,000 or €1,000, there is this weird thing called withholding tax, and we have that in our legislation here as well. So they might withhold in and keep it in their jurisdiction, say 20%. And then you've got to go looking for that 20% because you want the 20. And that's your way of making yourself known, because it's really to catch you out. You're going to make yourself known to that particular jurisdiction, and they may or may not tax you as well as the Irish tax. Now, I'm painting a very dark picture. 99.99% of the time, that is not the case. But if you're getting paid and you're getting the money from anywhere on planet Earth, yes, it is subject to Irish tax.
One more at the moment. I hope, Ryan, that's good for you. This is from Aidan. Yeah, if you were just going under your own name, do you need to register that with the company's office? Your own name as a company name?
You don't. So if you're just using your own name, there's no need to register your business name at all. No, you are you. And that is it. And then when you fill in the tax registration form, the tier 1, there is a little thing, what's your name, what's your address, blah, blah, blah. And then there's a little box that says trading as. And if you're trading as yourself, you'll just type in your name there again, or actually you'd probably leave it blank actually. So no,
can I just ask, just make a suggestion, just in terms of time, would it be a suggestion to let you, Peter, just go through a few things first, and then maybe we'll, if people can put up their questions on the way through, and we'll ask them at the end then, and because we have questions.
I might answer them as I go along.
Yeah.
Absolutely.
Great.
Okay, brilliant.
Okay, sure. So we'll go to the next slide there. Limited company, very similar. The tax form is identical, pretty much. Now, there might be a link to the company's office. I don't know if we did that. Ah, yes. Ah, yeah. Now this is the CRO, which stands for Companies Registration Office. I brought us to this page here because this is the page you go to when you want to check up on any limited company. It might be handy for research. Lots of reasons you might want to do this. But if you go into the CRO, there is a whole section there on how to register a limited company, and you do it online. You fill in a thing called a constitution. It used to be a memorandum, but now it's called a constitution. And it says, I'm a company, I make shares, and it's quite vague nowadays. It used to be very, very detailed in the old days. I know when I set up my own limited company many years ago, I just copied a memorandum from another company, and it was about 25 pages long, and I had rights over viaducts and everything. It was just the weirdest thing. Very, very Victorian. But nowadays it's just common sense. It's much, much easier. Okay. So do take a look at that website if you're into that. So just going back to the presentation there, Rebecca, for a sec. So tier 2, we did that. Limited liability, yeah, not really. It depends. I don't put too much faith in it. You do need you need a friend to set the business with you. So just one shareholder, you can own the entire business, but you do need somebody to be your secretary. It doesn't actually mean secretary like typical meaning of the word. It just means their job to send off the returns. A lot of people, and I used a friend of mine as my secretary, and technically, if you do something you shouldn't do and you get into trouble with the company's office, technically your friend, who's probably just doing this as a favor to you, can also be hauled before the courts if something goes wrong. So if you are going to use a friend for this, just make sure they know exactly what they're getting into. Also, people think if I register as a limited company, then my name surely is protected. If it's got limited after it, surely it's protected. And not really. Like if you set up a limited company and you're going to call yourself Google Limited, I'm not sure they'd even let you do that, but I think they might. But Google have barristers that are get paid far more than you're going to pay your barrister, so they'll talk you out of that. And we saw before, a limited company can be very small. People do it for lots of different reasons. So again, once you get bigger, you can do it for tax reasons. There are lots of things you can do as a limited company from a tax perspective that you can't really do as a sole trader. But like I say, that's a conversation for another day or another decade probably. So that's okay with that slide, I think. Yeah. Thanks, Rebecca. So yeah, the typical headings there. So these are all, I'm going to begin with the bottom one first because that's the least interesting. Assets. An asset is like a building, or a business is an asset, or a house or a car, whatever. When you sell those and you make a profit on those, that's called a gain. It's not called a profit, but people do call it profit. So CGT, capital gains tax, CAT, capital acquisitions. CAT is just a posh word for inheritance tax. So that's 33% at the moment. That might change, I think, after the COVID. Then going up the page there, the labor taxes. So I'm sure most of us might be familiar with these. There are two tax rates in Ireland, 20 and 40. It's been that way for a long time now. Was 42 a couple of years ago. The second tax that we pay is one that's not actually a tax at all, though we call it a tax, PRSI, social insurance in other jurisdictions. That's 4%. And you see 4% / 10.75. That's now 10.95, actually. I should update the slide. What that is the employer's PRSI. So that means that you pay 4% out of your pocket, and that goes into your pension, your state pension. That goes into medical perks. If you go into the welfare website, there's a whole list of things that you can get for paying PRSI. You get the free eye test, you get the free dental this and that. but your employer is also paying an extra nearly 11% on your behalf. And the reason I bring that up is because it just prompts me to say, many of you, when you kind of go self-employed or you go freelance, your boss might say, I'll tell you what, listen, just to make life easier for both of us, and, I'm going to treat you like an adult, I'm going to pay you gross every week. I'm going to give you, 100 quid a week, and you look after your own taxes. You're big and bold, you can do your own taxes. If your employer, for all intents and purposes, is actually your employer and not just a kind of a client or a contractor, then you should be on their payroll. And I put a link in the resource that brings you to, am I an employee or am I self-employed? And as you can imagine, it's a bit of a gray area. So one of the reasons employers will say, you look after your own taxes is, that means that they want to get out of paying that extra 10.95% PRSI. And that also means for you, if you employ people, and many of you will in the future, and you're saying to them, I'm going to give you 30 grand a year, that's going to be the salary. They're not really costing you 30 grand a year. They're costing you, what's that, 33, 34 grand a year, that extra 11%. So that's what that PRSI is. But it's 4% out of your pocket, 11% out of your employer's pocket. And then the famous USC, Universal Social Charge, they'll have about 0.5% off of it every year. Not really, I know everybody hates it, but it's not really a big tax on anybody. It's actually almost negligible on anybody under about 20 grand a year, but it is there. So the three kinds of taxes. Consumption, that's just VAT. So when you buy stuff, sell stuff, there's VAT. VAT is very much misunderstood. So when you become, and we'll talk about VAT in a second, when you become VAT registered, you have to charge VAT on your sales. So your consultancy fee is 100 quid, and then you go VAT registered at 4 o'clock today. At 1 minute past 4 today, your consultancy fee is now 123 euros, and that's 100 for you and 23 quid for the state. So when you become VAT registered, you become an unpaid tax collector for the state. It's like the plastic bag levy. You're collecting a chunk of change on behalf of the state, which is a very onerous thing to do. And then if you weren't interesting to the tax authorities before, you're now interesting because you become almost like an employee. You're collecting this tax on behalf of somebody else. Likewise, when you employ people, if you kind of mess up your own taxes, again, like I say, they're not really coming for you. I mean, I just do that for effect, but then you become responsible for other people. You acquire tax children, if you will. So then you do become interesting to the state because you have responsibility to make sure that if you're taking 100 quid off somebody's gross salary each week for taxes, you've got to make sure you're passing on that 100 quid to the state because it is kind of their money that you're passing on. So VAT, and then the good thing about VAT is, the great thing about VAT is, and one of the reasons that I did it was every time when you're VAT registered, every time you go shopping and you buy stuff, you pay full whack at the till, but you get 23% back, 13.5% back, whatever it is, about 3 or 4 weeks later. So every time you go shopping, it's like you're privy to this special secret sale. You're part of it. There's a sale on 24/7. A lot of people do just buy stuff to get the VAT back, and that's what I did. See, Rebecca did this, and it feels great. It's great to get a check back from them. And then the tables turn pretty quickly after that. But I'll talk about VAT a bit later on because it is hugely misunderstood, and I can understand why. The last one there at the very top, corporation tax. If you are a limited company, and that means if you're just a consultant, your company's paying 12.5, but you're paying the 20 or the 40% and the PRSI and the USC on whatever you take out of the business. So there's almost a double taxation there. But if you get proper advice on this, you can optimize this situation. So and I would say there's nothing wrong with that. And that's the same tax rate that the big corporations pay and that the small businesses pay. Okay, so they're the typical taxes. VAT, so how do you register? Rebecca, do we have a link on this page? I can't, security.
Ooh, yeah.
Sorry.
Yeah.
Oh, I think it's to the VAT search. Okay, so let's go. I'll just talk about that. Yeah, the VAT rate search. So, yeah, that's it. That's where I was going. So a lot of people, like I said before, they think, okay, I'm a business now. I'm the real McCoy. I'm going to register for VAT because that's apparently what you do. That's not necessarily what you do. So, for example, if I, in my former days, had decided all I'm going to do is I'm going to teach accounting. I'm going to work for the enterprise boards, or the LEOs as they're called now, or the business agencies, and just teach accounting. I started off. If that's all I did, then on that particular service, I would not charge VAT. I would not be allowed to charge VAT. gone. So in other words, the VAT authorities are saying, you know, please go away. We don't need to talk to you. We're not allowing you to charge VAT. And that's good and bad. The dark side is, of course, when I buy stuff, I'm not getting back that 23%. I've basically been reduced to just a regular civilian, so to speak. And it could be the case that, like I said before, I was also in consulting. So on the consulting work, yeah, I was charging 23% and declaring VAT, getting VAT back on some of my purchases. So the worst thing you can do is to talk to a friend about this who's already in business, and you say, what are you charging? And I say, oh, I'm doing 13 and a half. You say, oh, I'll do that as well, because it just sounds like a nice number. You've got to make a list of every service that you provide. And then if you go onto this page, you see there are over 7,500 things there, and find yourself on that page. The one I show my students in class is photography, or actually the one I show nowadays actually is theater tickets, and the different VAT rates on that, theater admissions, and there's things like equipment there. And it kind of depends on what you mean by admissions to some kind of artistic endeavor. And further in there, like a dry, now dry, I think to change the wording, but dry, I think means that there's no liquor license. Yeah, no food or drink. So if you're thinking, well, I'm going to do what I'm going to do, and I'm going to charge VAT, and you think, well, actually, well, maybe if I have a liquor license, I may or may not do that. Or if the some premises in the old days, or nightclubs in the old days, used to serve food at midnight, and that was for some kind of VAT reason and other reasons too, I think.
I remember that actually. I remember the curry corner coming out.
Yeah, the curry and the I remember too, the dodgy chips. It was great after the pints and the rice, dodgy rice.
The soakage.
Exactly. So it's really extensive what they do. And then there's certain things that, you know, I don't know, shoes, for example. I think actually there's no VAT on shoes, but there's certainly no VAT on children's shoes, that kind of thing. So you got to look into this list and see, well, what is the rate applicable to me? So my rule is there, don't talk to your friends about this. If they're already up in business, they might not be doing it correctly. And what happens then is if they're charging the wrong rate, well, the VAT authority will say, well, actually, you know, you were charging 13.5%. You should have been charging 23. You had a pretty good year last year. So we'd like you to send on to us the VAT that you should have, would have, could have been charging from the 13.5 to the 23. And we'd like it by the end of the month. And that's going to be the pretty open conversation. So do look into the web page for this, and do look at that list. It's actually humorous. Some of the stuff they have there is actually hilarious. So for that reason alone, it's worth looking at. But my golden rule is, do not talk to your mate who's already in business about this, because you'll be led up the garden path, I think. So the discovery, the thing I do, photography, apparently I meant to charge VAT on this. You go, okay, I do. And when do I do it? Well, when your sales, not your profit, your sales hits certain thresholds, 37.5, 75 for goods. It's not always clear, by the way, what is a good and what is a service. And any of you that are thinking of getting into transmitting, I think they call it now, is transmitting digital services, that's a whole other area. And then there's within the EU, outside the EU, you need to talk to somebody about that, because that can be quite complicated. So let's say it's just you're selling chairs, for talk's sake, just to make it really silly. Once your sales hit 75,000, you must register for VAT, and that might happen on a Tuesday afternoon. And the next minute, you've got to start charging VAT. Now let's say you think, well, I'm not going to hit that. I actually don't want to hit that. That's not me. It's not my kind of business. It's a niche business. I'm never going to go there. Well, that's fine. You're never going to register. But of course, that means you're never going to get VAT back on your purchases, which might be important to you in the early months, because it might be the only thing you're living off. I know when I started off, that's how I paid my bills, with the VAT refunds, because I bought a fair bit of equipment in the first couple of months. So there's that. Now you might say, well, actually, you know what? I don't know if I'm going to hit that threshold this year, but I probably will next year, or maybe not for a while. I don't know. But I'm going to register from day one, because I need to set my prices. And I don't want to be saying to my clients, you know, suddenly out of the blue, everything's gone up by 23%. That'll look bad. I'll get their backs up. I just don't want that hassle. I also want to get used to adding VAT onto things. Just a discipline I need to learn. Or I need to buy lots of stuff early on. So if you're setting up, you know, say it's an event business, you got to spend 100,000 on sound equipment, light equipment, whatever. You're going to get back 23% of it. That's a nice refund to get in the first couple of months. Now, if you forget to do all of the above, there are certain rules about backdating. I won't say what they are right now, because, well, it's kind of 3 months-ish, but it's a gray area. So if you miss the boat, it's not all is lost. You need to pick up the phone and talk to them about that.
Sorry,
So,
Peter, can I just come into there? I suppose we are a little bit over time now, and I know we did start 5 minutes late. So, but it is 2:35 now. So I'm hoping that people are going to stay maybe for another 5 minutes or whatever, just so we get to
okay.
towards the end. And then maybe we're going to have a couple of questions and answers. But I've just sent out a message saying if you put your email in the chat, we will put an FAQ document together. So any questions that we don't get to, there's a lot of questions actually that have come in around artists and art exemptions, and do artists and sole traders have to fill out the TR1? So there's some of the questions that have come in, but just to let everybody know, just put your email in the chat and we will put a document together with all of the questions and answers in them.
Yeah, fair enough. Well, what I'll do is like I'll whiz through some of this because we kind of covered some of it before, and then I would definitely want to get to the artist exemption one, and then we'll do that. Okay, so we'll go on through this, and so there's a case study, and people can just look at this. That's pretty much how taxes worked out. So the profit of the business is 40 grand, and then as well as there being certain tax rates, there are certain credits. Now there's a link and resource to the credits. Everybody gets pretty much two: the credits, PAYE, and the single or the married credit, and there are more. And the great thing about having an online tax account, myaccount.ie or whatever, is when you go in there, it'll prompt you every so often, have you thought about this? Have you thought about that? So that's definitely a takeaway. Go into the online tax account, whether you're going to be self-employed or not. It's a great little service. It's like an online bank account. So
can I just say, sorry, and I'm not interrupting again, but the resources that you have put together blew me away. Like, they are phenomenal. So thank you so much for that. And just, to make sure to get everybody to actually look at them, because they are really, really good. I haven't seen anything like that, a repository like that put together. So, I know the link has been put up in the chat for people to take it off, but you can get in touch with us. There are lots of ways to get in touch with us as well to get that. And I think Jade just put a few of those ways up as well.
Cool. And then Dawn, I'll add a few more to those once we get feedback as well. Yeah, cool. Okay, so these are the various returns. The one I just draw your eye to is the Form 11. And if you're self-employed, we call this the sole trader tax return. And this is the one that you fill in. You can fill it in online. It's actually very user-friendly, the online, because most of it doesn't apply to everybody. So as soon as you don't choose certain options, the rest of the form will gray out, and you'll be through it in no time. But of course, you can get people to do this for you. There's a whole new market, by the way, in these kind of tax clinics. There was one, I live near one actually in Wexford Street in Dublin, and they will basically fill in this form for you for, I think their starting fee is only about 90 quid. You can do it yourself, but they can do it too. So that's fine. There's no need to go to the full accountant for this, unless you particularly want to for other reasons. You want to get some of their advice. If you're doing VAT, this is called the VAT 3. I don't know why it's called 3, but it's an old form. And then the BU1 is the one that you send into the company's office. If you have to fill in a few forms and send it to a few places, the good news is you can pretty much copy and paste one set of data and send it to different places. Not as onerous as it looks. So I'll leave people with that thought. Okay, so if we just go on to the next slide there. I think we're getting close to the end actually. How can the accountant help? The important thing is, they can do everything for you. It's from a tax perspective. People just like the security of an accountant. But remember, tax is personal in the sense that if a mistake is made in your tax, the tax authorities will come to you and say, well, you made a mistake, even though you might have got your accountant to do it. Your accountant is not a knight in shining armor. They were in the old days, but don't think of them like that now. We all need to think and empower ourselves. And they can help with all of those things: registration, tax returns, etc., etc., etc. What they can't do is what we call management accounting. So taxation accounting is one kind of accounting. It's where you're doing tax because you're doing accounting because you feel you have to. You've got to be compliant, and that's not a good reason to do anything. Management accounting means you do it because you want to, or you realize that maybe it's a good thing to do, and that's just recording your sales and your expenses. That's it. A kid's jotter, you record stuff, a spreadsheet, or you have one of those really cool kind of apps, you're recording stuff. Only you know how much you should charge for your job. If you say to your typical accountant, I'm doing photography work, how much should I charge? Unless they have other photography clients, they're not going to really be able to help you. So only you understand your business. Do not rely on your accountant for that, unless they specialize in that area. The most important thing you can do is not historical accounting, but looking into the future. And if we get a chance to look at the spreadsheet, we should be really having an idea of what our bank balance will look like in 3 months' time. And that can be pure guesstimation. And by definition, because we're not psychic, it is going to be wrong, our estimate, but it's a good thing to be thinking about, because our bills are fairly regular. Here we go. So this is this is a spreadsheet that you can download. And all it is for the next 3 months, money in, money out. And there's a running balance there on the right-hand side. and a cool little chart there. So Rebecca, if you just scroll down there a bit, I want to bring people to the yellow bits. So the yellow figures, actually, for some reason I forgot to do the last two yellows. The yellow figures are the forecast figures. So I know, for example, by mid-July, early July, actually, there's a lot of red there. This is not good. This is not good. But at least I know there's something not good coming around the corner. So I can do something, if I can, about that now before the check bounces. And when the checks bounce, it's embarrassing for a start. It could affect your credit rating. You might be going for a mortgage in 3 years' time. Your credit rating might, this will be reported. So all this is money in, money out. This is bookkeeping. And that's all you need. You don't need the software. There's a lot of really cool entry-level software packages out there. The one we use on the arts management course is one that has no manual, because the designers say it should be so intuitive, you shouldn't need a manual. So that's Breck, do you want to just type in a number there, and just to people show, like a bill in, say the 5th of July, you think you're going to get a bill for €100. So I don't know, anything. It can be the Vodafone bill. Just type in 100 there. People should see that, and enter. And yeah, I think that number changed to 3889 and Vodafone. So it's important to put that list in. So therefore, everything you have on that screen, you'll also have kept the receipt on a spike, or you've stapled it. And that's it. That's bookkeeping done. And that means at the end of the year, if you are going to get an accountant to do it, they have a lot less work to do. And remember, accountants don't actually do your accounts per se. They have, an intern in there trying to detangle these Christmas tree lights, and they're charging you a lot for their time, and they're not paying that person anything like what they're charging you. So make life easy for everybody is the main thing. Could we just go briefly back to the PowerPoint there, Rebecca? I think we're near at the end. So an accountant can help you with your taxes, but can't help you with their business per se unless they actually know the business. A couple of tips: just write stuff down. Right. The best way, the best place is Excel. Excel is very intuitive. Or there's Google, they call it Google, the Google spreadsheet.
Google Docs. Oh, yeah.
Google
Numbers,
Sheets.
Yeah. Google
Sheets,
Sheets, I think, isn't it?
And there's other called Numbers, I think, which I think Amazon do, or whatever. And stay informed. There are loads of arts organizations that do these special kind of courses. Sign up for their newsletters, and just empower yourself. Remember, all you've got to do is know about 1% of what's going on and write stuff down. That's it. And then I think the last slide there is from a book. I think the author, I think she's a lecturer in the Royal College of Art in Kensington. Oh no, okay, these are the two websites. Yeah, you've seen those. And the last slide there is like, why would you do all of the above? Because it seems painful. Yeah, money clarity buys you time. So so you kind of do a couple of simple things, get them out of the way, build in the design early on, and that means you can spend 99% of your time actually doing what you like doing, rather than those weekly, monthly headaches, which is very common. So do put in the effort early on.
Or my yearly terrible time.
Yeah, absolutely. Everybody's in the boat. And I was the same when I was self-employed. Like I used to do a lot of catch up at the end of the year. And it's not pleasant. So there's things we can do for that not to be the case.
Sometimes being an artist.
Thank you so much, Peter.
Sometimes being an artist or being self-employed doesn't lend oneself to being great with numbers. But I think you've given us some great tips here on how we can maybe work with that. And I don't want to call attention to myself, but I will look at the revenues website and the great resources. So I've put the link for the resources in there. I have a couple more quick things I want to say, if that's okay,
Sure.
that are in relation to FYMMO, and then I'll turn over to Dawn to close this off. But just to let the IDT grads know that there is an Erasmus graduate traineeship that you can apply for. The details are all here. This slideshow will also be up in the Google Drive, which has the other resources, and it's something you should look at. To me, it looks kind of as a nice opportunity. And then the last one is what we're doing in IEDT as part of FYMMO is a celebration of our 2020 grads due to COVID. It was kind of a fizzle rather than an explosion at the end of the year. I'm sure you've all had that. So what I'm hoping to do is find a way to celebrate our grads by kind of having them tell their stories and then use those stories to help inform our incoming fourth years and how to, manage the waters that are ahead. And I know that Dawn has some other events she wants to tell you about. So do have a look at this and maybe follow us on Facebook as well as Instagram. And the links are all in the chat there.
Okay, so well, I have emailed you about a couple of events that are happening on Tuesday and Friday. So one is the Artists for Artists, and the Art Council are coming in to talk about kind of, you know, what that is, what it's like to be an artist, what, you know, and they're from different places, sculpting and fine art. So we've Rebecca or Deborah Donnelly, Annika Berglund, and Justine Harrington from the Arts Council, and one other possibly actually. And then on Friday, next Friday, we have entrepreneurs in. So from all over industry, a few entrepreneurs, and we have Alistair McBride hosting that, and he's worked with high potential startups and all that kind of thing. So that's really interesting. So even if you're not an artist or you're not an entrepreneur, these are still in for you. But I suppose one of the things that I just wanted to say before we close off, and thank Peter so much. And again, we didn't get a huge questions and answers piece, but I suppose, Peter, I'm going to hand you to close, and you know, with our huge thanks. And I kind of want to say to you about, you know, one of the things that maybe that people are hanging on for is that artist's piece and that artist's exemptions, and whether that sole trader fills out that TR1, and maybe you could just speak to that in your closing. So thanks a million.
Absolutely, no. Thanks, Dawn, and I think that's good ending. And like I say, I'll take a look at the chat and maybe add some resources afterwards that people can return to. Yeah, artist exemptions. If you take a look at the link, there's various people can qualify for that, and there's a checklist of why that might be you. The important thing is that if you get that, it means that your income from that particular pursuit that you do is free of income tax up to 50,000 euros, and the limits were more in the past, and they may change again. I'm not sure. But the important thing is people who do qualify think, well, I don't have a tax bill, and you don't. You're right, you don't have a tax bill, but you as in a PAYE tax bill, but you still have to do a return. There's a whole section on artist exemption in the return. So you've actually got to tell the state, I don't have a tax bill, by telling them that I don't have a tax bill. So actually by filling in the form, because what worries them is when people don't fill in the forms. Again, for most of us, they're not that worried about the numbers. It's when you are not compliant that they get a little bit nervous. The other thing as well is the exemption is only from PAYE taxes, not from PRSI, and it's not from universal social charge. So that's important. So you still have those. Now, they're 4% around, they're not huge. But again, if you're not paying the PRSI and, you know, a year down the line, you go for that free eye test, you're probably not going to get it. And there's other things that could go wrong if you're not paying your PRSI as well. So you have a form to fill in, and you have 2 other minor taxes to pay. So it's only PAYE that you're exempt from. So that'd be my ultimate takeaway.
Just talk a little bit about the types of art that are that this applies to, because there are certain, it has to be original and creative. So you can write a novel, but you can't be a journalist. You can write a play, but you can't be an actor, because actors are considered interpretive artists rather than creative artists. So do look at the fine print, because it's not applicable to all art forms, but for many it is, you know, and it has to do with authorship and the classification of interpretive as opposed to original creative. So it's worth looking into.
Okay, so thank you so much, Peter. Thank you for all of that information. Amazing. Thanks, Rebecca. Thanks, Jade, for all of the work that you've put into this. That was amazing as well. And I'd like to say thank you to everybody who's here today. Please be here over the next few weeks too. We'd love to see you, and to have a great day, and let us know how that information was for you. So we'll email you out. Feel free to email back and let us know how that was. Okay. Thanks so much, everybody.
Thanks, everybody. Well done.
Bye.
Bye.